Welcome back to Trading Nuances. Today we will talk about what it takes to join the top 1% of successful day traders. 90% of traders lose money, but the 1% who succeed have a distinct edge. In this video, we will break down the mindset, strategies, and habits that set these traders apart. Understanding the odds. Alright, let's start by talking about the odds. You might think day trading is all about making quick profits, but the reality is the odds are actually stacked against most traders. Did you know that around 90% of traders lose money? That's a pretty tough statistics, right? So what sets the top 1% apart? It's not about luck, it's about understanding these odds and navigating them smartly. Let's dive into what makes a difference. Inconsistency is the biggest challenge. Many traders lack consistency, making random decisions instead of following a disciplined strategy. Trading with no clear plan leads to erratic results and losses. Unrealistic expectations. Many beginners expect quick profits believing they can get rich fast. The reality is that day trading is a long-term game that requires patience and continuous learning. Expecting to win every trade leads to frustrations and poor decision making. High emotional toll. Trading is emotionally demanding. Fear, greed, and impulsivity can lead to poor trades and losses. Without emotional control, traders are prone to making reactive decisions rather than thoughtful ones. Overtrading and impulsivity. Many traders are drawn to the action and end up overtrading, taking too many trades, some of which are not well thought out. Overtrading typically leads to greater risk and more frequent losses. Market noise and randomness. The market can be unpredictable, and many traders mistake noise for opportunities. Not all price movements are significant, and mistaking random fluctuations for patterns can lead to poor decisions. Now, let's talk about one of the most important things that separate successful traders from the rest. The mindset. Patience and discipline are the foundation of any winning trader. It's easy to get caught up in the excitement of fast trades, but trust me, good things come to those who wait. Successful traders don't rush. They understand that the best opportunities take time to appear, and when those opportunities do show up, they stick to their plan and avoid letting emotions like fear or greed take over. Let's dive into why patience and discipline are absolute game changers. Patience is key. Successful day traders are not in a rush to make profits. They wait for the best setups and opportunities. Rushing into trades often leads to unnecessary losses. Emotional control. Fear and greed can cloud judgment, leading to impulsive decisions. Successful traders maintain a calm, rational mindset regardless of market conditions. Stick to your plan. The key to success is consistency. Stick to your strategy even when the market tempts you to make impulsive decisions. A solid plan gives you structure and reduces emotional trading. Know when to step back. Sometimes the best decision is not to trade at all. If market conditions are not ideal, don't force a trade. Wait for a better opportunity. Next up, let's talk about one of the most crucial aspects of day trading, risk management. It might sound boring, but here is the thing, protecting your capital is everything. You can't make profits if you don't have money in the game. Successful traders know that limiting losses is way more important than hitting big wins every time. It's all about playing the long game. So in this section, we are going to break down how to keep your capital safe and why small controlled losses are actually a sign of good trading. Limit losses to stay in the game. The main goal is to stay in the game long enough to succeed, and that means limiting your losses. Small controlled losses are far less damaging than large ones. Risk only what you can afford to lose. Never risk more than 1 to 2% of your capital on a single trade. This ensures that a string of losing trades doesn't wipe out your capital. Use stop losses. Stop losses are essential in protecting your capital from unexpected market reversals. They allow you to set a predetermined level for a loss, keeping your risks in check. Accept losses is part of the journey. Losses are inevitable. What matters is how you manage them. Focus on minimizing your losses while keeping your winners bigger than your losses. Now, let's dive into strategy. This is where the magic happens. Having a solid strategy is what sets top traders apart from the rest. It's not about guessing or hoping for the best, it's about having a plan and sticking to it. A winning strategy gives you a clear framework for when to enter, when to exit, and how much to risk. And here is the secret: you don't need to catch every move, just the high probability ones. In this section, we will talk about how to build a strategy that gives you that winning edge. Have a clear, defined strategy. A strategy is essential for consistency. Know exactly when to enter, exit, and how much to risk in every trade. A set of rules reduces decision fatigue and emotional trading. Use proven technical tools. Successful traders rely on technical indicators, chart patterns, and market sentiment to make decisions. These tools help you filter out the noise and focus on high probability trades. Test and refine your strategy. A strategy isn't perfect from day one. Continuously backtest and adjust your strategy based on market conditions and results. Learn from past trades to improve future ones. Adapt to changing market conditions. The market is dynamic, so successful traders must adapt their strategies. What works in one market environment may not work in another. Stay flexible and adjust when needed. Finally, let's talk about something that's often overlooked: continuous learning and adaptation. The market is always changing, and what worked last week might not work today. Successful traders don't stop learning. Once they have a strategy, they keep refining it. Every trade, win or lose, is an opportunity to learn something new. Whether it's reviewing your trades, staying up to date with market trends, or experimenting with new strategies, the best traders are always evolving. In this section, we will talk about why constant improvement is the key to staying ahead. Analyze every trade. After every trade, review what went right and what went wrong. Each trade is a learning opportunity to refine your skills and strategy. Stay informed. The best traders are always learning. Keep up with market trends, new tools, and evolving strategies. The more you know, the better decisions you can make. Adapt and evolve. Markets change, and so should your strategies. Regularly evaluate and adapt your approach to stay ahead. Sticking to one static strategy will lead to stagnation, while adapting to change helps you thrive. Invest in your education. Constantly improve your knowledge by reading, attending webinars, and testing new strategies. Lifelong learning is a key trait of successful traders. To become part of the 1% of successful day traders, it takes patience, discipline, effective risk management, and an adaptable strategy. The road to success in day trading is long and challenging, but if you focus on consistency and continuous improvement, you will get there. Stay disciplined, patient, and always refine your strategies. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and comment below with your biggest challenge as a day trader. I would love to hear from you and learn about your experiences. See you in the next video. Happy trading.